All right. All right, guys. Well, I'm back. Unfortunately, my computer did an automatic, one of those automatic updates, and so it logged me off of my live stream a couple hours ago that we were on. But right now, I'm just reviewing euro dollar. Again, I was expecting here. Remember where we put this buy stop order here, and I was expecting it to turn here. It started to, because I was looking at this area here of demand, and we also have an open daily open price here at 109.03. So I was anticipating a turn somewhere here. It looks like it's just pulling back a little more. And so now that it's pulling back a little more, I'm still thinking it's going to go up, but unfortunately, we just got to ride this few more pips out on here. It's taken all day. Glad we weren't on, because we would have just been sitting here watching this thing turn like this. This would have been brutal. So I'm glad we didn't sit here, but I'm still looking at this 12-minute. I do like this area here of possible demand. And so I would mark that off like that. We'll just see how this works out. Demand zone. There we go. We'll change this so that it says we got this from the 12-minute chart. We don't need to put the hourglass because it already hit it right here. So we're not waiting for price action to get here. It's already here. And so we're going to change this symbol here to an uptrend. Trend line. That showing that it already triggered. And if you guys notice, remember I told you guys we have our own indicators here. And if you guys want access to that, of course there's a fee and all that stuff. So there's a subscription to this, but you can have access to these indicators. We'll teach you how to use it. I have a whole team. We'll help teach you how to use it and all that good stuff. But that's what gives us these flags, basically, or these indications. We like to call them, instead of indicators or indications, we like to speak of them as odds enhancers. So we call them odds enhancers because it's not perfect. Nobody's trading is perfect because there are anomalies that happen in the markets. I can give you some examples of why they happen. So there's not going to be anything that you can do to control them. But what we can say is almost always we don't get the trend wrong. Almost always. Because that's the most important part of trading. Getting the trend correct. The second most important part of trading is getting in at the right point of the trend. You just don't jump in with a market order because you got the trend correct. It might be in the middle of pulling back. It might be getting ready to explode. It might be getting ready to just go sideways. Do you want to really sit there while it goes sideways because you got in at the wrong point? You want to get in right before you believe it's about to take off and go up, so that the moment it goes up, you can immediately protect it with some type of what we call positive stop loss. Meaning, if it hits that stop loss, you're going to make money, not lose money. You want to make sure the market does something like this, takes off and goes up, and then you put your stop loss down here, not down here. You make your stop loss above where you entered. Now that price is up here, if it does come back, fine. I mean, you don't want it to. You want it to go up here so you can really make some money. But if it does come down here and it gets you or stops you out, at least you made something from it. It doesn't matter if it was $5. You made $5. Enjoy that $5. Be happy you made $5 and make another one. Because if you do that 20 times, you just made $100. And if you do that 20 more times, you just made $200 more. Get used to your stop loss getting hit. Your positive stop loss is getting hit. Be a master at that. You want to make sure that you get to be a master at getting in at the right point so that where you get in, turning but it needs to be turning. So when I say turn, I don't mean it has to explode like this. I just mean I want to see, I want to get in a trade, even if the trade is going sideways like this. I want to get in at this point. It's just going up. Let's imagine this down here is not here. Or let me find one. Hold on. Let's see. I think this is the best one. So let's just say we were trying to get in this trade to capture this whole uptrend or whatever. If I'm getting in the trade, then I'd rather get in here if this is where price action is. I'd rather get in here and it's moving upwards immediately, maybe not fast, but it's not going down. That's the entry point you want. If you just jump in on a market order, let's say you jump in on a market order and, we obviously see it didn't continue going up. It pulled back. This is what I mean. You got the trend correct because you saw it going up and you're like, oh, the trend's going up. Let me jump in right here, market order. But then you got to deal with this pullback and then you get this and then this thing pulls back and then it finally explodes. So you got two pullbacks down here and down here before this thing even took off. You want to master catching it down here so that it never comes back, or catching it down here so that it never comes back. Not catching it up here. You still got the trend correct, but you got to ride this stuff out because it's going to be hard for you to believe that you're right when it goes down like that a couple of times. That's going to frustrate you. And you might get out of the trade and then it's going to take off and then you're going to be mad at yourself going, I knew it was going up. Then why didn't you stay in? It's because it played with you before it did what you thought and you changed your mind. And this is what real trading is about. It's not so much about learning how to trade, because learning how to trade, the technical part, I can teach you that. That's easy. That's I'm saying easy because if you apply yourself, it's like learning anything else. A new sport or playing a new instrument. It doesn't matter what you're learning. Anybody can learn anything. So learning this is not the hard part. People lose money because they can't, deal with it mentally. It's the mental anguish. So I think this thing is going up from here. I'm going to go ahead and place another buy trade. My trade that was up here, because I just bought it again, the reason why I put it down here, even though I'm not getting in here, it's averaging out this price and the price that I got in up here. It gives me the average and it puts them together right here. And now that it put them together, it's showing me with this one being green and going up and this one being in drawdown, this is where I'm at combined with the two of them. So as this is making money, the other one is also reducing its drawdown, and then this should be going down as it goes up. So earlier when you guys were on here, if you were on here, I had placed this buy stop order as a potential area where we can go long, but we were going to wait and see what happens. And then I said, if that doesn't work, then maybe this will work. But as you can see, it worked a little bit. It came down and it just worked as a pullback. It didn't work as a trend change. So what they did was they came down and went slightly lower into this area of demand. And if I were to put the fib tool, I can actually see if it's in demand or not. Oh, that's why this was a pullback. So this is what we call a first paycheck. Anytime you get within about the 25% fib, what's going to happen is you're going to get a pullback, and then it's going to drop down into demand, and demand is always below 25%. And below means it closes. Notice there's no close. These are just wicks. It's not closed unless it's colored in. So it didn't close until this candle right here. So yeah, this trade was not ready for a long when it wasn't even closing below demand yet. And now we're here. You guys excuse me, I have bad allergies to something recently. So trying to deal with it. So sorry for being nasally. But yeah, if you guys want to jump in this trade, I'm going long. Just added another position right now. So that's 2 standard lots. This was my other area that I believed it was going to go long at. If I take the fib off, you can see that as I was typing this up, the indicator that we have here already started highlighting that, yes, this is correct, that this is an area of demand. So that makes me happy to see that. It was doing it here as well. And then, of course, it came back down. So it's doing it now. We're going to see if it's going to maintain it. But as of right now, I'm pretty hopeful that it will maintain. Let me delete this. We don't need that anymore. We said it was going to be a downtrend pullback in this area. How ironic my order ended up in that same price. That over. All right, so I put here that based on the 1 minute chart, it may not even hold because that 1 minute chart is too small. But I put on there that we might get a pullback here. This was another area, and this was an area that I was going to do an order, but now we just did this one here. We just got in at 108.97. So let's just call it 109. There we go. And then we will get rid of this one. We'll leave that there just to see what happens. Oh, wow. We put downtrend pullback right here off of the 1 minute chart hours and hours and hours ago. And now look, I just noticed it looks like the indicator is highlighting this area as a potential area where there's some resistance. And that's funny because we identified this earlier, that could be an area. And now that we're on the 12-minute chart, it's showing possibility of it. Let's see if it's on any other time frame. Nope, not on the 15-minute. Not on the 10. What about this? Yeah, I highlighted that too. See? All right. Awesome. So there's going to be something in here that's going to, and this obviously is some type of resistance. So you can kind of see it across. So that's good that it's picking up this little bit of supply that we have here. Let me look at all of our indicators and see what we got going. So we have confirmation on the 10-second chart says uptrend, obviously clear. 30-second chart, 1 minute chart says uptrend as well. And it looks like we're about to get confirmation. Here we go. We're getting it on the 3 minute. Once we get on the 3 minute, we're pretty solid. So we got a pivot low. That means if it's pivoting, that means it's getting ready to start changing its momentum to the opposite trend. And we can see that starting to happen. We don't have really some higher lows yet. It's kind of the first real pivot low. So I see this one back here, but it's higher up. Then you have the uptrend. We have another pivot low, and then an uptrend confirmation. So, and it's kind of coming within the area of where our buy stop order is. So it may work out in our favor. We can see there's a lot of what we call in the professional world white space. Mine is black because I changed the background of my charts. So, but they call this white space. So looking at all this white space, we should have a nice move up without any real disturbance other than this area here. We're going to probably get a pullback because there's going to be some resistance that you can clearly see way back here too. It's definitely going to be something. So may not be big, but whatever it is. Jeez. I'm getting the messages in. All right. So we have pivot low, uptrend signal, and uptrend confirmed on the 3-minute chart. So this is an early confirmation. This is a super early confirmation. So we call this like an aggressive signal. It's an uptrend signal just letting us know, hey, we're starting to get, uh, higher highs in this area here. And based on those, sorry guys, based on those higher highs, it's going to start giving us some signals. So to see that we have another uptrend confirmed here, what that tells us is that the higher lows, are starting to work their way towards the upside. So it's like your first one is your pivot low, your uptrend signal, and then you get an uptrend confirmation, and then all of a sudden, our smooth Heikin-Ashi, which is what this is, we have this programmed as well with very specific coordinates, and it gives us an understanding of when there's going to be a turn, and you can start seeing here that on average, the turn is already starting to happen. So it's been on course for a downtrend, and now we're starting to see some green present itself. But I've already jumped in, so it's up to you. This is not showing up down here, even though I jumped in down here, because I had a drawdown position up here because it pulled back on me. But if you guys are interested in getting in, this is a great time. Give me 1 second. I'll put that in the wrong group. Let's be this one. Oops. All right. Any questions from anyone? If you guys have any questions, you can go put it in the chat box, and we can go ahead and discuss things. But again, I was just looking at this here for my own personal self. If you guys have something you want to look at, I can look at that, give you my personal opinion. Let's see here. All right. All right, so looking at this here as it's going up, we still have strong upwards momentum. And looking at this strong upwards momentum, look like it's starting to change as I'm speaking. But what we want is if we continue to see price action closing above each candle like this flush, then that lets us know we can hold on to our long position. And at some point, you want to be able to average that out and make a good, determination as to whether or not you should stay in or get out. And I'll show you how to do that as we look at this here, as I'm taking a look at it. We got more confirmation here from the indicator that it's building up some more momentum towards the upside. It's having a fight right here with some minor resistance. But all in all, I'm anticipating, without belaboring this here, I'm anticipating based on the 12-hour, we're on the 3 minutes, so we're really zoomed in right now, kind of on the scalping level. But if I zoom out and go to a higher time frame, what we can see here is that we have a strong area of supply that has not been entered into. So I'm anticipating they're going up here. Now, originally, I was in this trade here, expecting the breakout to continue, but as you can see, it turned around against me from that breakout, and I was in drawdown. And so right now, I just jumped in another trade, and then that's how I ended up here. Uh, so I'm still anticipating it going long up to this point, and then once we get here, we should have a nice little drop down to maybe this area. Let me turn this off. Probably, I don't know, this candle or maybe this area here, somewhere in here. We'll find something down here because that'll be the polar opposite of that area. Will be this. So we gotta figure out what is the demand level for this curve, and that's going to put us somewhere. This is probably an immediate retest, like I was teaching you guys before. This is an immediate retest, and so there's probably going to be something in the 105, let's say 50 area, maybe even down to 105, 40 area. So we'll probably get a nice move down, but I don't think it's starting from here down. I think they're going to push up a little bit more and then come down. So that's all we're kind of struggling with right now, is to see is that's what it's doing, and it kind of looks like it. Let me turn this off. So this is where we got in, 12-minute on the off of the 12-minute. We're on the 12-hour, but we were on the 12-minute chart inside of this candle here, this green one. And we can already see a wick is starting to be created, which means they've come into this price, and now it looks like they're turning around. Give me 1 second. I will be back. All right, I'm back. All right. So, like I was saying, I am looking to eventually short the euro dollar long term down here. But I'm anticipating that it's going to come up here again to this inverted hammer and begin to short because this represents lots of selling pressure. And so, with that selling pressure, what we want to do is we want to take advantage of that and short this. But we got to be able to get in at the right price. So, I believe that a 110.05 would be a nice price right here, right where the sellers are really getting the win of the battle is right there. So I'm anticipating that it's going to drop from here. So I jumped in here on a breakout. I was trying to catch the breakout to the upside, and I thought it was going to keep going up and get into this area, then turn around. But as you can see, that's not what it did. It broke out and then turned around and came back to the same breakout area. And it caused me to be in drawdown, as you guys can see now. And so what I'm trying to do is wait for this to turn around. I found another area here on a 12-minute chart. So let's go there. And here that candle is. And I'm waiting to see if it's going to actually accept that and respond. So far, P2P is our indicator. This up here is what I'm talking about, P2P Indy. It's picking up the fact that there is some demand in this area. Just because it's picking up that is demand, it doesn't mean that it's going to hold for a very long time. It just means it's holding for now. So the key is to be mindful of it, watch it, and then protect this position as quickly as possible. And just be prepared for it to get hit when it does turn around, because sometimes price action doesn't just take off, it goes up and down. Of course, we all want these right here just to take off. Just take off and don't come back. All right, so looks like things are working out. It's creating another base. And I really like this base because what this tells me is that there are sellers here trying to get in here. Let's blow this up real quick, teach you something real quick. As buyers was going up, some sellers came in right around this price here from 109.03 down to 109. Those 3 pips right there. There was some selling pressure here. And you can tell by the way this candle was shaped. But the fact that right next to it, another candle is beginning to push past this, and it hasn't yet. So this might be a downtrend just by the way it's shaped so far. We need it to break. See how if I do this and this candle is on the inside. What we need in order to continue, the uptrend is we need to see that candle engulfed. So this candle has to eventually break out above this. And we want to see, when I say engulf, we want to see the body engulf this body. And the word engulf just simply means it needs to cover it up and keep going. And that'll give us our uptrend. So right now we're waiting for which way is this thing going to break out. This was the last high and low based on the 12-minute chart. This was the last high. This was the last low. And price action is bouncing in between it. And so we want to see which way is it going to go, because if it comes down here first, it may come back to our original entry. But if it breaks out to the top type first, it should continue. So let's do this. Let's go down to the 3-minute chart. And then we're going to make this. Let me turn back on my alarms. Where are they? Oh, here they go. So we're going to do this. Oh, looks like it's already doing it. Let's go down to the 3 minute. It was originally the 12, I think. Wasn't it? Yeah. Now let's go to 3. All right. So now that I have this set, so this is my uptrend and downtrend breakout alarms. I've created these alarms here. You guys want to create this type of alarm? I can go into it, show it to you on the screen. This is video recorded. It goes on YouTube as well. So if you guys want to subscribe to YouTube, you'll see it on their live stream. So you don't have to take a picture of it unless you want to. But I just wanted to show you the, excuse the background. Here's the alert that I created. So if you go in here, here are all the settings for it. So it's the euro dollar. It's the horizontal line that I have here. And so I'm just using for the downtrend anchor break. I want to pick crossing down the horizontal line. Just need it once per bar close. So what that means is don't give me an alert when it touches it. Give me an alert when price actually closes below that price. I want a confirmation that it's going down there. And so down here I put 03, which stands for the 3 minute. DT is downtrend and BO is breakout. Downtrend breakout. In this case, we're talking about anchor breaks. So I'm going to call this a downtrend anchor break. I'll tell you the difference in a minute. And then I just put this little note to myself. It's sell time, reverse any buy positions. I may not even do this, but it's just letting me know the trend is changing in that direction. So let me save that there. And then now that is sitting up there. And then I'll do the same to this one, edit it. You can see it has all the same information. The only difference is this will be an uptrend anchor break. And it'll be buy time. Save it. And so now one of these, when price action closes, meaning when the color of the candle is below these horizontal lines or above these horizontal lines, then that means it has a greater potential of going that direction next. That's how we anticipate the breakout. Let me see. What do we have going on here? Oh, I didn't see that alert. Did I? Oh, that was the last alert? Yes. Okay. So our 3 minute was the last alert that we got. So this is a nice alert. I like this. Now this looks good. We have our pivot low. Okay. I like to call it the 4 horsemen. So we have our pivot low. That's number 1. And then we have, oh, here's back here. Sorry. We have our pivot low, our uptrend signal. They went down a little bit more, so we got a second pivot low. But then we got our uptrend confirmation. But now we have a lot of smooth Hikinashi. I want to see at least 3 of these before I, make my decision. So I need my pivot low, my uptrend signal, my uptrend confirmation, and then at least 3 smooth Hikinashis before I really feel good about it going in that direction. So I'm feeling good about it with the 3 minute. We can also see the uptrend with the 1 minute. 1 minute just turned as well here. Right around this price, it started going up. The 30-second pulled back, but it looks like it's turning around to go up. The 10-second even pulled back and it's going up. So the fact that all 3 of these are in an uptrend and they're lower than the 3 minute, it means that we have the potential of this thing breaking out to the top side. So hopefully you guys understand what I'm doing here. I'm taking the lower time frames that's lower than the 3 minute, the 1 minute, the 30-second, and the 10-second. I'm looking at how they're moving. And if all 3 of these come into agreement to the upside, then I'm going to anticipate that this is going to be a uptrend anchor break. But if all three of these start aligning themselves to the downside, I'm going to assume that this 3 minute is going to experience a downtrend anchor break. Plus, I set my alarms on these horizontal lines. So not only do I have these three charts on the lower time frame, which currently all say, including this 10-second, they all say up. And when candles start turning blue, we have it programmed that way to turn blue to let us know that there are institutional buyers coming into the market. So institutional buyers are now coming into the market, which means this 3 minute uptrend that we suspected, it looks like it's going to hold. So let's see if it breaks out to the upside here. It should. Now, while we wait for that to break out to the upside, if it goes that way first, I just want to reiterate, we're not going to be going long for a long period of time. We're just going to go long up to here. I think there's enough selling pressure here to cause this thing to come down to here. Once it comes down to here, then I think we're back into a big picture uptrend all the way up to like $1.22, something like that. So this goes back to what I was telling you guys earlier. You don't just jump in because you have the trend right. I believe the big picture trend is an uptrend. But I'm not silly either to just jump in on an uptrend and hold the uptrend, because I need to be careful of inverted hammers like this at the pivot high, because those might cause price action to go back down. And we just got to be aware of that stuff. And I don't know about you, but I don't want to hold no trade for no 300 pips, even though I got the uptrend correct. It's going to pull back for 300 pips. You don't want to be in a trade with like that. So you want to understand not just the high time frame trend, but you also want to understand their intermediate time frame trend, and that's going to be anything between 4 to 12 hour, I would say. And then low time frame, that's when you start. And the intermediate might even go down to like 1 hour. I would probably do that. So 1 hour to maybe 12, something like that. That would probably be intermediate. 12 might even be too high. But in any case, all the minutes would be low time frame. So you want to know what the trend is on each one of those, and you want to trade accordingly. If you have any questions, go ahead. I love questions. Put the questions in the chat group, and I'll go ahead and answer them. If you guys want to look at any other chart, let me know, and I'll take a look at it for you, and then see if we can come up with a conclusion on where to best get in and out. All right. All right, so we're just going to be waiting here. And once I get the confirmation on here of which way it's going, hopefully it does that soon, because I don't want to be waiting too long on here. But hopefully we get some kind of breakout. See how they're playing? This is how you know we picked the right area, because they're taking so long to make a decision here. Can I do Kiwi dollar? Yes, I can. Not a problem. Let's do Kiwi dollar while we wait for this alert to happen. Do I have Kiwi dollar? Oh yeah, I have it right here. Kiwi dollar. All right, let me go ahead and find some pivots that we're dealing with here. We just got an alert on the 10-second chart. Oh, actually, I can stay on here. Bam. Let's stay here. I'll use this one here. Change that to 10 seconds. All right, so the 10-second chart is showing us it's sideways with an uptrend bias. That's what we call that. Uptrend bias just means I'm anticipating it to break out to the upside. Yeah. Wow, two of you guys wanted to see that. Okay. So yeah, let's take a look at that. Yep, we're already getting uptrend confirmation. We got a pivot low just popped up here. Yeah, so it's more uptrend. So we're correct about, well, so far we're correct about the trend being up. So while we're waiting for this to work itself out, let's go to Kiwi dollar. I'm not in that trade, so cool. Let's start with the high time frame. Can you do a 1 hour analysis, please? Okay. I'm going to start with the high time frame, and then we'll break it all the way down, all the way until we get us an entry. So I'm going to go from the actual trend that it's in. We're going to find out if it's in a high time frame trend, intermediate time frame trend, or in a low time frame trend. What I don't do is jump right to a chart, like right into a time frame in my head. I don't trade like that. The way I trade, I'm not saying there's something wrong with it. I'm just saying if you think about it logically, price action can turn within any uh, time frame or any group of time frames, I should say. So whether it's low, intermediate, or high, and you need to know what it's currently working with, then you make your decision of trading off of that chart, not off the chart you want to trade off of. Because if you say, let's go straight to the 1 hour, what if they're right now at the moment of breaking out of the 1 hour and you're trying to get into 1 hour? That's not a good idea. So let's start big picture and see where we get from there. Remove all the drawings here. I'm sorry, guys. Give me just a minute. These allergies are like kicking my butt. I'll be right back in about 2 minutes. Probably not even that long. Thank you so much. All right, thank you guys so much for waiting. Had to take a Benadryl. That thing was strong. All right, so I'm gonna map out. I'm gonna use my handy dandy tools. Let me see. We're gonna map out the actual pivots here. Let's get rid of all this stuff. All right. So let me see what that alert was. It said sell. So here we have downtrend breakout, uptrend, downtrend anchor break, and then uptrend anchor break. I did say I was going to explain the difference between the two. I'll go ahead and do that now. An anchor break is when the candle that is the anchor. So the candle, we call it the candlestick in charge. Whatever candle that is, it's the anchor to the trend. So this candle right here, this is where price actions first started going up. So we call this the anchor. It's holding the trend in place like an anchor would on a boat. So the pivot is called the anchor. The absolute lowest point on this candle, that's called the anchor. And then the very highest point on the highest candle where this came from. So I look at this lowest point and I have to ask myself, where did this low point come from? It came from this high point. This is the last high place it went before it came down here. So these are my two pivot highs, my pivot lows, and I'm checking to see which way is price going to go first. And typically it'll give you an indication by which one it breaks out of first. So what we ended up seeing is we have an anchor break to the downside. So we have a downtrend anchor break. And this is based on a 3-minute chart. So price has to, on the 3-minute chart, no other chart, it has to come down and go past this line here. Now, if I only wanted to go past this line, then that's an anchor break. But if I want it to close below the lowest price that it closed at before, then I have to use the bodies of the candles. And so as price action is coming down, you would call this the distal body of these two candles. And I would have to move this to the bodies like this. And then I would change the label to a downtrend breakout, not a downtrend anchor break. Because a downtrend breakout says this was the lowest price that was fulfilled. And then up here, I would have to use this one was where it came from. I'd have to change this to down here. This was the highest price that price action was fulfilled. Let me get rid of some of these candles so you can see what I'm talking about. So when it was like this earlier, just these candles, you can base your decision on closing price, like here and here, or you can just make your decision on high and low. That's all you're doing. And they've given names to this stuff. And they make it seem all deep, and it ain't that deep. You guys already know what a candle is. You know that this is the low of the candle, the high of the candle. This one in this case, this is green. This is the open. That's the close. That's all you're basically doing with anchor breaks and downtrend breakouts. It's not rocket science. It's just another perspective of the same thing. You're just doing it with multiple candles instead of one. That's all you're doing. So all I'm saying is, with all of these candles, not just one candle, where is the open price or the close price? Because I have two here and they match right here. And here's the open and the close up here. And so I need to change this right here because it's not at the pivot high, which would be considered the anchor break. It's not at the pivot high. So I got to change this label to uptrend breakout. Like that. Put that back in the center. And then I would label those with the 3-minute or whatever. I'm not going to do that right now, but that's the whole point of it. And now I can make my decision for the breakout based on closing price. But everybody has a difference of opinion on which is best. Even myself, I don't actually have an opinion on which is best because they both work. It's just a matter of how aggressive do you want your confirmation to be. That's what it boils down to. How much of a confirmation do you want? Do you want it to close below the last price that it closed and opened at? Or do you want more confirmation where you want yours to be based on it coming down here? And even when it gets here, you got to make another decision. Do you want it to just touch it and now you're satisfied that it's going down? Or do you want price to close below the anchor break and now you're satisfied that it's going down? So these are all options that you have. No one is better than the other because they all work. It's just you got to choose what you want to do in that moment. And so it's whatever. The most extreme you can get is this, which would be the anchor breaks. So let's do that. And then we'll get into the Kiwi dollar. Anchor break. So this is the most extreme you can get on a range. And then what you would have to do is program the alerts in here like I did earlier. And once you, matter of fact, I think I might have erased them by doing that. Or was it on here? I think I deleted them. Oh no, they're right here. There it is. Oh, I changed the label is what I did. Okay. All right, sorry, I'm trying to figure out what I did wrong. Ah. So anchor break, this was on the 3-minute. And I originally just kind of had it like that. I will just take these off for now. We don't need those. Uptrend. All right, now let's go back to that 3-minute. And I'm only here because we got those alerts. So I just want to see what it's doing. Let's go ahead and play this out. So you guys can see by me, picking the extremes. Let's look at what happened and played out. So we had this and we had this. Those were the extremes. And look what happened. It closed below this one before it started closing above. Okay. So now that it's going above this, even though it went down here, it satisfied some type of demand, and that's why it's going up. So because we still have a good indication that it's going to go up, we could go ahead and hold those positions for this uptrend. And I'm holding this all the way up to 110, which is up here. And then I'm going to short from there. All right, now let's look at Kiwi dollar. So with Kiwi dollar, we have these two pivots here. And so that's too big though. That looks way better. I think that's it. Yeah, that looks like it's it. 9, 10. So what I'm doing is I'm trying to figure out which pivots are correct. And so it looks like it's this one and this one. And so we're going to lock that in on the 10 month. So I'm just looking on the side here. Let's type in any numbers. It doesn't matter for my pivot high and my pivot low. And then I'll just adjust it when I get to the chart. So we'll just use 78 and 58. How about that? 0.78 is 0.58. Let me get rid of all these other numbers in here. All right. And now I can drag it to where I need it. Back here. So we were here, and then here. Sorry, hold on, guys. All right, I'm back. Thank you for waiting. Yeah, so it looks like the original pivots were this one and this one, and it may have already satisfied demand on the big picture. Yeah, that looks satisfied to me. So remember, I was telling you guys earlier, once you find curve, which is, the actual area of price that they're working with or in between, they call that curve. Once you find that, uh, as long as price action goes below a quarter, 25%, that's the demand zone or the demand area. This is the area where we anticipate it going up. Now, this area is huge because, if I were to measure it to go from here to here, you're talking about 400 pips. So it's a 400 pip area that they came below. So you don't want to just jump in here because it came below 25%. You still want to do some homework on a lower time frame. But if it already happened and you're trying to figure out what the trend is, uh, if you map this thing out and you see that price has already dropped from its highest point down, and if you put the fib on the lowest point and price action has already moved below 25%, you need to start preparing yourself for an uptrend. And then that's why we have it already labeled here on our EDP here. It labels it for as uptrend. But, even if we didn't have this, we know how to read the charts. All of this is just odds enhancers. Like I said earlier, it's just helpful information, but you got to know how to read the chart yourself. So now that we know it's going up, we can look at now a more tighter time frame. So this was the big time frame here to here. We don't need to worry about that because it was already satisfied. We can't catch it way down here no more. That is over. And this is what I meant when I was saying I don't go straight to like any specific time frame. I want to know. I want to have a God's eye view of the entire market. I don't want to have tunnel vision. Everybody that trades has pretty much has tunnel vision, and then they wonder why price action is breaking out away from them, and they didn't catch it. It's because you didn't see what was going on the big picture. You were too zoned in. And so now that I know the big picture has been satisfied for the downtrend, I'm not going to be looking to short Kiwi dollar. It already shorted. It's already come down. How much we got here? Kiwi dollar already came down 3,300 pips. It's done. And then we already have it highlighted here with another odds enhancer that it already hit demand. So don't anticipate shorting this thing. Will it go down? Absolutely. It's going to pull back like it did here. You know, it went up from here and came back really hard. This is what we call a retracement, not a pullback. When it comes down so hard that you can make money off of it, that's a retracement. But if it comes down and it's not worth you getting out of your trade, it's worth holding it, that's a pullback. So that's the difference between those two words there. One you should trade and the other one you should hold. So let's map out the more intermediate time frame, something, you know, much closer. And so let's do these two here. Just lock those in. I'm now going to turn on here some of our helpful things here. We're going to turn on a sell position. So you can see that sell order just popped up. Let's turn on a buy position down here. That popped up. As you can see, it already hit that. So price action was down here. It was up here. It's our pivot low that we picked. It's our pivot high that we picked. And already, just by me turning this on, I'm telling the computer, hey, has it already hit demand even on the intermediate time frame? Because it already did it on the high time frame, and it already shows me that it did. It went up, and it already came down. It already hit this price. And our other one would have been, our second opportunity to get in would have been here. Look how accurate that looks. Look how it came down, hit that when it came up. The next time the next 10 months, it scooted over and price action started going right up again. It didn't go down, it went up. And this is what I was trying to tell you guys. You want to get in at these points where it's just going up. You don't want to get in like at some point wherever you get in, you know, and it goes up, like let's say something like this. Let's say it goes up and then turns around and goes down and then goes up. Man, you don't want to do none of that. So this thing is super accurate because we programmed it to be. And so you guys got to learn how to read these charts and then use some of these helpful tools. If you guys want access to it, let us know. And then we'll get you plugged in. But the point is, it's already satisfied. So how many pips did it move up already? All right. Based on the first one, well, if we do the total, the straight up here, from 0.5569 about 969 pips from that first lowest one. So we would have made 969. We'd be up 969 pips. Well, right now we'd be up 747 pips right now, but we would have gone as high as 900. These are the situations I was telling you. When do you hold and when do you keep moving? Get out the trade. And so it depends on where you got in. If you way down here, you're already 700 pips ahead of the game. Just hold it because it has a long way to go up. Now that we see that the intermediate time frame was satisfied as well, we need to figure out where to get in. And we now understand why price action is battling right here is because it's at mid pivot. Mid pivot, that's what that MP stands for. Mid pivot is the mid area between where the institutions are buying and where they're selling. This is the middle area. Why is this important? Because it's the area where they get an opportunity to regroup and decide, are we going to go back down and short again, or are we going to take off and go up? Mid pivot is probably the most dangerous area on the chart, simply because you don't know which way they're going to go unless you analyze it. And because we analyzed it, we already know ultimately it's going up because the trend for this is up. We just got to figure out where do we get in on this 10-month candle. We got to get in this candle somewhere, one of these prices between 65.32 and 60.84. We got to figure out which price is the best price in this candle to jump in so we can finish going long. You don't just jump in to go long because it's in an uptrend. Just because that says uptrend, that doesn't mean market order long. Because what if it pulls back and goes to the bottom of this red candle here and then go up? This is what you're going to experience. A 232 pip drawdown position. Because you're like, oh, it's uptrend. I'm just going to jump in. No, you still got to go even lower. Now we got to go to a lower time frame, but I'm not going to move my pivots. Why? Because supply has not been satisfied. Only demand. So I don't move my pivot high, my pivot low. I leave it there, and now I just go down the time frame. So what I'm going to do is this. I'm going to turn off the buy one there, and we're just going to leave this one because we already know that's the one that worked out for us, was the lower one. We're going to ask the P2P to give us some places where we can hit our TP. The first TP would have already been satisfied and hit. That TP was so perfect that when price action came back, where did it come back to? Same TP. Where is our TP2? Okay, so this will be the next area you guys should be targeting. Whoever's trying to go long on Kiwi dollar or whoever's trying to trade Kiwi dollar, if I were you, I would be focused on a long position. Again, I cannot advise you on what to do, but if I were you, I'd be focused on a long position. And my next TP that I'd be focused on would be 67, and I'd leave it at that. That says 67.03, but get out before that. Just get out at 67 even, make your money, and then we'll figure something else out. If I'm online, cool. If I'm not online, then you know how to trade, then go ahead and find another way to get back in there, because once it hits this TP2, it's just going to pull back, and then it's going to keep going long. So you want to try to figure out where to get in again. All right, so the last TP we're going to be looking at is 7066. We can leave that number there. That's an institutional number. So we'll leave the 7066 there. And then we have, now if it went as low as this one here, then we do the same thing. So this says BX05. What that stands for is buy extreme. This is an extreme buying position. It's like the lowest position you can get when you want to jump in a trade without going into too much drawdown. And without going so low that you miss the opportunity. So you want to be high enough. So like, let's say this candle, we were trying to get in on this candle. So there was something that we saw in here that would make, this pop up, but you can't be down here, like all the way at the bottom, because you would have missed the trade. If you were down here at this price, you wouldn't have got in the trade. So you can't be so low that you don't get triggered, but you don't want to be so high that if you jump in here, it wicks way below you that you can't even hold it as it goes back up. This has to be strategic. And we can teach you how to do that. But looking at this here, this is the extreme. So if it goes to the extreme, then I anticipate, can't promise, but I do anticipate that's what it's going to do on the other side. So if you're an aggressive trader like I am, and you want all your money, you want to go all the way to the other side, then there it is. If you're not that aggressive, you want to get out, more on a conservative level, then that's where we have the more conservative position here, the sell order here. So if you think it's going to turn early, you sell short at 71.67. If that doesn't hold, then the next place it should turn would be 73.66, and then after that, it's just going to come back down again. So this is my analysis. Now what I'm going to do is I'm going to go down to the 1 hour because I'm done. I need to go to the 1 hour and find out where to get in. I know where I'm going. TP1, I don't have a chance to get that one because it's already, not only did it hit it on the way up, it already came back to it. So that's done. But I'm going to leave it here just so we can see it. It's at mid pivot, meaning it's trying to make a decision of when it's going to, how far it's going to pull back and when it's going to pop back up. When it does pop up, you guys should shave half of your position at 67. Matter of fact, let's change that. Let's go in here, take out that, and make it a 67 even. 0.67. There we go. So 67 even on take profit 2. And then here's your take profit 3. We're going to leave that at 70.66. And for those of you who are, and I said it backwards, I'm sorry. For those of you who want to sell short or, short Kiwi dollar, if you are an aggressive trader, you want to get in at 71.67. This is the beginning of supply. Some people like getting here, and I'm calling it aggressive, but it might be the best thing that happens to you. Sometimes when price action comes into supply, it only wicks in and then it just drops. It does one of these moves like this. It'll just wick in and go down and never come back. We all want that one, but that one rarely happens. But if it does happen, you want to already have a sell position at the beginning of supply. Now, it's also possible that it won't do that and that it'll go and play around in supply and go a little higher, so then you have a second one. This is why I said don't ever put a position greater than 2% of your net asset value, whatever your balance is in your account. Make sure you're checking to see what the trade value of that position is and evaluate it. Your broker should give you that information, and your broker should show you that what the trade value of that position is. I don't care what you're trading. Don't ever trade on any one position more than 2% of your balance, because if it goes against you, you'll be okay with closing that trade out. If you're trading with a position greater than that, it's going to hurt you to see how much money you're losing so fast. So keep it safe. So if this is a good situation, if I put a 2% position size on here and it goes against me, it goes up here, that's another 200 pips. Most people on the call with me will not hold a trade and drawdown for 200 pips because you're going to think you got the trade wrong. You didn't get the trade wrong. You're in supply and you just got in at the beginning of supply and not knowing there's a more extreme level of supply. So I just put a 2% position size here and a 2% here. And if both of them hit, great. I'm making double the money. If one of them hit, okay, I'm making single the money. And now I'm just hitting all my TPs on the way down. That's how I trade. And that's how I do it. So I don't trade heavy. I trade conservatively, and when you just do those all the time, that money starts adding up. That $5 becomes $10. $10 becomes $20. Like over time, your 2% keeps growing. It keeps getting bigger because your balance keeps growing. And that's how you're going to build up your account over time. Just like any other retirement account. You're not going to get rich quick. So don't be following those people that's preaching all of that. I make $10,000 this morning stuff. I've done that too. But I'm not preaching that because that doesn't happen every day. That's rare. That's because the news came out and, some other anomaly happened and you just got lucky. Like the market moved in your favor real quick. So, but don't chase money. Tell money to chase you. You map it out and tell money, hey, come see me. I want you to come here and pay me. And then I want you to go down here and I want you to pay me. You tell money what to do. Don't chase a dollar at all in your whole life. Do your homework and let it come to you. Let's go down to the 1 hour now, so we can see what does it look like on that grand scale. Actually, it's too much information. What were we on? The 10 month? Yeah, that's what we were on. So here's what it looks like on the 1 day. Let's Let's try the 10-day, see what that looks like. All right, so I'll let you guys look at this. I gotta get some tissue again. I'll be right back, but I'll let you guys look at this for a second. I don't know if it lets me do that. We don't have an entry yet, but I'll come back and find one. I just want to test this out, and I'm going to paste this and see if it works. Does that allow you guys to click in and see it? Let me know when I come back. I'll be right back. All right. Thanks for waiting. All right. So now we can start finding a place to get in. So, were you guys able to click on that link I just posted in the chat group? Was anybody able to click on it and it pop up? Let me know if it works. Awesome, it works. Cool. Thank you, sir. All right, so looking at Kiwi dollar, we have a long way to go to the upside. Even from right now, just going up to TP2 at 67. We roughly have about 386 pips to the upside from where we are. That's if we jumped in on a market order right now. So for those of you who are that aggressive, then jump in on a market order. But we're going to see, it might even be prepared for a market order long. Because when I'm looking at it, this area right here, this is what we call an uptrend wick over wick. So this wick is over that wick, and it's facing uptrend. And so because that's an uptrend and it already wicked into this uptrend area, it lets me know that they have plans to go up from here. So we're now talking about this area and that area. All right, and then so we're gonna do our let's do anchor breaks. Yeah, so let's do downtrend anchor break, and let's do I have uptrend? Yeah, uptrend anchor break. Here we go. I'm doing anchor break because I've already verified that it's pretty much going an uptrend from where it's at. I'm now mapping out here. We have about a 120 pip window to work with. And this is what I mean when I say you got to do your homework. I've already done my big picture homework, and I know where I'm going first. I know where I'm going second. I know where I'm going to short. You see how much information I got by not just going straight to the 1 hour chart? This is what I mean when you want to do your technical analysis, not fundamental analysis. I ain't looked at nothing in New Zealand, nor have I looked at any USD news. I don't care. I can see supply, demand, support, and resistance all right here. I can see price action. I can see momentum. I can see it all with my eyeballs right here. I can see pivot highs, pivot lows. I don't need to look up anything else. I can if I want to, if I'm maybe worried that this may go down a little more before it goes up. I might want to check out the news because maybe something in here that I'm looking at is making me afraid. And so I will go check the news to see if there's something strong coming up. And if there is, I'll probably cash out and then wait to see which way it goes. Or maybe I'll hold on to it and watch it closely when the news comes out. But I'll make that decision when it comes. But at least I know big picture. What's happening? If I'm on the 1 hour, I got to do that homework on the 1 hour. And then the next day, when it breaks out of the 1 hour, I got to come back and do homework again, and then do homework again, and then do homework again. You're just giving yourself a job by trading like that every day. So map out the whole picture, map out the curve, map out the actual pivot low and the actual pivot high that the market is dealing with. We call that curve. And right now they're dealing with this low price and this high price. They've already come all the way down. Now they're going back up. And as they go up, they're going to play games with us like this. And we just got to be prepared for it. So since this looks like uptrend to me, I'm going to map this out. And I want to verify that it's uptrend. I'm going to go double that 10-day to like a 20-day. Okay, there's nothing in there. Yep, 14-day even says uptrend. All right, so we're going to go from the 10-day down to the 1-day and see what this area looks like here. Okay. So now we see price actions in here, and I need to figure out how to narrow this down. And I've already found it. Does look like uptrend. I'm going to change this here because I see how this is all going up. It just went straight up, all green. I'm going to change this from an anchor break. You see how I'm changing my mind about the things I'm doing? Like this is an anchor break because it's the pivots. But now I'm changing my mind because the chart changed. I'm on a different time frame. It gave me different information. So I'm changing my mind. I'm narrowing it in so I can dial it in and find the best possible price I can get in. And it still won't be perfect, but it'll be damn near accurate. And that's what you want. Because none of these are going to be perfect. So I'm going to put that here because this is the last place it went up. And this was the last place it went down. So let me take this here, move this here. And now I'm going to call that one where it just went down. That's now going to be my downtrend. I'm sorry. Where it last went down, this needs to break that. And if it does break it, that's going to be called my uptrend breakout. All right. And this uptrend breakout, we found it on the 1-day. And then right here, we were actually up here. So remember we had this candle here. Was it this one? It was this candle and this candle. Ooh, you know what I can do, guys? I'm going to do that instead. Let me show you what I'm going to do first, and then I'm going to show you a more advanced technique. It's really aggressive, the next technique I'm going to show you. But I see something that I can do in order to narrow this in. But I'm going to show you the current picture that we got so I don't confuse anybody. But this is the last place it went up just based on the bodies. So this is considered, based on price action being up here, this is considered the distal body of this candle. And this red one here, this is considered the proximal body on that red one. So if it violates this red candle and actually closes above 63.60, meaning there is green above this, an actual filled in green candle above this, then I'm going to assume or anticipate they're going to keep going up because they had to break past all of these sellers. This is the basically the trading understanding that you guys got to have. You got to be able to think outside the box. You got to know why things are doing what they're doing. And so when I'm looking at these candles right here are telling me that some sellers came in while the buyers were going up. Somebody came in, some big institution, and they said, nope, we're taking this down. And they tanked this market. There are a lot of selling orders in here. You have to add a lot of selling pressure in here. So this right here is called an immediate retest. This long wick, what another institution is doing is they're trying to test how powerful are all of these sell orders. Now that they've tested it, you know what they're going to do? They're going to now accumulate all of those orders. For some of you who ever heard that phrase before, accumulation and distribution, that's what that means. They're now going to start accumulating enough orders down here so that this wick does not happen. This wick means they got rejected by all of these sellers. And in order to not get rejected, they put a certain number of orders in and they went, okay, let's add 200,000 orders here and see what happens. Rejected. Too many sellers. But now that you threw that 200,000 up here, guess what? You also lowered the amount of sellers that's in here, because they had to use up their selling pressure to fight this buying pressure. So all the buyers are going to do is add another 200. And when they go up here, guess what? It won't pull back as hard. And then they're going to add more orders and it won't pull back as hard. And that's how you keep getting these higher lows, because they're fighting all of this selling pressure here from before. The buyers are now fighting it, and they're like, we don't care about your selling pressure no more. You can push us down if you want. We're just going to add more orders. Push us down, we're going to add more orders. And they just keep buying all the way up. That's what's happening in the real world. That's a world I used to be in. That's why I'm able to understand what these candles are doing. And I want to show you guys how to do this on a daily basis for yourself. Manage your own retirement account. Go to work, have a job. There's nothing wrong with that. You should be contributing to the community and giving your service to the world, not sitting behind a desk somewhere and making money. I don't have to be on here with y'all. I can just make money by myself. I don't need to tell nobody nothing. But that's not being a good Samaritan. That's not being a good steward of your time. There's nothing humane about that at all. You should be sharing. If you've got this gift to be able to do this, go help your family and your friends and go give to the world and help them out, since you can make money so easily now. Now that money's not an issue for you, go do something. Go do something good with it. Don't go buy yachts and parties and jets and planes and have all this debaucherous stuff going on, and you just kill yourself and kill other people. Don't do that. And if that's what you're interested in, I'm not interested in helping y'all, because I only want to see people grow and get better. And if that's you, welcome. This thing is going down from here. So then let's change this. Since we're not at the pivot, we're just at the distal body. And we need to change this here to a breakout, downtrend breakout. All right. And this would also be, we found this on the 1 day. Now you guys see why I label with time frames. I'm a multiple time frame analyst, or multi-time frame analyst, some people say. Oh, you know what? There's this thing I might be able to show you guys over here. I don't know if it'll pop up. Can you guys see publish idea to the right? Yeah, in the chat group, if you can see this. I don't want to talk about it if you can't see it. I don't know what live stream shows it doesn't show. Anybody online to verify if you can see to the right where it says analyst and neutral? These settings here. Just put it in the chat group. Okay, perfect. So what I want to show you is this. This is what I specialize in. If you go to categories, I specialize in trend analysis. So support and resistance, supply and demand. I can clearly explain to you what these all are, how they work, what the candle formations would look like if you were in these. You guys are already seeing me map it out and identify it. I deal with pivot points, fib tools, trend lines, candlestick analysis, and this is what I do a lot. I don't do too much seasonality, because that doesn't matter to me. I don't care what season it is. If I know the answer to all of these, I already know where price is going. It doesn't matter what season it is. People who trade seasons are people who are looking for volatility. That's the purpose of this. You want to trade during a time where it's moving a lot. So I get that, if that's the case. Fractals, I use those as well. I don't do cycles really. I do understand news though. I like news cycles. So news does have a cycle. So that's probably the only cycle that I would use is what's happening in the news. So I'm basically in the trend analysis. If you guys ever heard of a market technician, that's basically what I do. Except I'm not certified, nor do I have any desire to be certified, because there's a limitation on what I can and cannot do with that. So I don't want the government telling me what I can trade and what I can't trade, who I can work for, who I can't work for, and Just leave me alone. And if I wanted to get certified, you're now going, the only purpose for getting certified is to go work at a big institution. If you go get certified and you go home and sit down, you just wasted your time. You wasted your time going to get basically a certification, or it's almost like the trading degree, if you want to look at it like that. You wasted your time doing that if you're just going to come here and sit. I can teach you that myself. You don't have to go waste time and money and energy, because when you're done with it, the only value you're going to have is you get to go work for anybody in the world. So if your interest is to go work for a bank or an institution, then I would advise you to go in the direction of what's called a certified market technician. Uh, I'll warn you now, it's one of the hardest tests you're going to ever take. It's a self-study, and it's not easy to pass. Very few people in the world have it. It's almost like getting your doctoral degree at a university. That's basically that's what you're going to go through as far as the process. So if you've never gotten your AA, your BA, your master's, don't even start trying to be a market technician. You're not going to pass because you already don't have the discipline. But if you are that kind of person that's disciplined, then I say go for it. If you want to work for big institutions like Morgan Stanley and all of them, if that's your go-to or the thing you want to do, then that would be your best course of action if you like trading. But you want to be able to analyze stuff. And so that's where I'm trying to share with you guys where I'm getting my information from in my knowledge base. So looking at this here, going up and down, this is it's going to either break out to the upside or downside. But looking at it, now that I mapped it out, look at what it did. While price action was in here, it wicked up first before it wicked down. So it's giving us our first little clue that they plan on going higher still. So just like we mapped out that they're going long, yes, they're going long, but what if you would have put a market order in right here to go long? Oops, that's the wrong one. I just went wrong. That's what I just did. But what if you just put a market order here to go long because we mapped out the big picture, said uptrend up here? Guess what? You'd have been in drawdown 450 pips. You'd have been right about the trend, and you'd have been in some deep, deep, deep drawdown. You might not have made it. It might have ate up all your money. This is the example of what I'm talking about when I say don't go straight to the smaller time frames. And this ain't even a small time frame. This is a daily time frame, and it still would do you bad. So stop running these little time frames that be just bouncing all over the place. You know, up, down, up, down, up, down. Get a clear picture of what the big picture trend is, and then focus on that. Now, if you go into the 1 hour, I wouldn't be so opposed to saying let's go straight to the 1 hour now that you know what the trend is, because now I'm not going in just to do anything. I'm going in to buy only because I know that's the big picture, and that's how you want to look at things. So we need price action to create a close either above or below this. Now, none of us have time for that. It's at 63.20. It's still got about 40 pips to go. So I need to narrow this down tighter. So this is what I'm going to do over here. You guys remember when it was this candle here and this candle from the higher time frame back on the 10-day or 20-day? Yeah. You guys remember this right here? I said to you, this looks like uptrend to me. And so this was the top of it. That was the bottom of it. I got this from a high time frame 10-day chart. Now that we're down on the 1 day, these are those same candles. That's that same candle right here. This is what it looks like when you zoom in. Now that I'm zoomed in to that same uptrend area, I can now see all the positions that have been fulfilled and closed, and I can narrow down my answer. So if this is the candle that I'm dealing with, then I already have the uptrend breakout in the right spot. I can't move that one. But look at this candle. Here's the downtrend breakout here, which means I can move this one to a little higher position here because I'm basing it on the 10-day candle. The 10-day candle says only prices that were satisfied was the ones beginning at 63.06. Now I can delete this. I can delete this. And look, I got a shorter window. I am within, current price is, turn that back on. Current price is at 63.14. And we want to make sure that it doesn't go below 63.06. Look how close we are. So now that I'm here, I can see we're at the bottom of this thing when it gets ready to go up. Or we should be at the bottom. We don't know if this is actually going to work out. We're just guessing, and we're going to do more analysis, but we're going to see. But right now, this is what I have. So now I'm going to go from the 1 day. Now we can go to the 10 hour. Notice what I'm doing. 10 day, 1 day, 10 hour. Why am I doing that? Simply because I want my candles to be symmetrical. I don't want them to be odd and weird. Like what if I went from the 1 day to the 23 hour? Look how my candles look. They look strange. Look how it's all jagged. I can't read that. That almost looks like bar charts. Like these. It looks like the bar chart candles. So you want to make sure whatever you're finding things on, use the other indicator. I mean, use the other time frames that coincide with that. So we went from the 10 day down to the 1 day. We found some more information. Now let's zoom in some more. We're trying to get that sniper entry. Let's zoom in some more. Thank you, Pilarche. Next level stuff. All right, I'm glad you're enjoying it. Somebody's listening to me and learning. Look at here. More information. I'm on the 10 hour now. We can see, yes, it did go up and it came back down. But now for the first time, I got some body information in here and I can see not only did it come to the bottom, but it wicked below our downtrend breakout, but never closed below it because there's no color. It's just a wick. So this is confirming that we're correct. But now that I have that color, guess what I can do? I can even do this now. Now you see how I narrowed it down? I am now within, what's that, 6 to 18? I'm within 12 pips of where I want to jump in. Because I see this, now I do a market order. And I can even go from the 10 hour down to the 1 hour. And I can see what the 1 hour is doing. And I can turn on my indicators if I wanted to, but I can see price action just turned down to go here. You can even put your price as a buy stop order. So this is 63.18. You could put your buy order in at 63.20. Just 2 more pips above. Why do I say 63.20? Because whatever this is, you got to pay for spread. Spread is about 2 pips, almost 2. Add those 2 pips to that price and make it 63.20 so that as soon as you jump in the trade, you immediately pay for spread and then you just start being green. Because you added spread to your entry price. So you want to be able to do that. I'm sorry, when you add it, you're going to get in earlier. Sorry, 63. Is that what it is? 63.18. No. 63.18. And they push you up. I think I said it right. Put 63.20. I don't know why my brain is acting backwards. But you can put, for those of you who don't trust the market order long, you can put 63.20 and wait for it to give you confirmation of the uptrend breakout. And then you get the market order long, or you can just already have a buy stop order set at 63.20. This is my stop loss would be below this. So I'd probably put my stop loss here. Let's see. I'm just going to make it 63 even. Where did it go? Oh, it's thinking. All right, and there's my stop loss. Now watch this, you guys. Even though the stop loss is here, I'm going to put mine even more. I'm going to tell you why. I'm going to put mine at 62.85. Here's a good trick for you guys to learn this. Here's some more next level stuff for you, Pilarche. This right here, I'm going to put my stop loss further away. Leave my same position here. But watch this. I'm going to leave my downtrend breakout alert right here and turned on. Did I delete the other one? Oh no, we said we're gonna do downtrend breakout. That's what it was. All right. So I gotta create an alert for this one because this is different. So for this, it's the Kiwi dollar. My notification, I want it to annoy the heck out of me. This is my money on the line. 1 minute. Just keep beeping until I come turn this thing off. Annoy me because I don't want to lose my money. I want this thing to cross down. I'm very specific. If you just put crossing, that means if it just touches it and goes a little bit below, it's going to make a noise. Nope. I don't want that. I want it to cross down only. I don't care about it crossing up. I want it to cross down that horizontal line. And I don't want it to just cross only once. I want it to cross consistently over and over again every time it closes below. Once per bar close. Once every time it closes. That's what you want. I'm wanting to do this on the 3 minute. I was telling you guys before, the 3 minute for me is my confirmation here. This is a 1 hour chart. So you don't want this thing to be over this for a whole hour before it tells you, yeah, we're going up. Because you don't know how far it's going to move in that hour. But a 3 minute candle, it just means it's going to be above this uptrend breakout for a maximum of 3 minutes before it makes a decision for me. Now, is that always going to be accurate? No. But at least it's short enough to get me in early and long enough to at least confirm. One time is like, okay, on the 1 minute chart, it closed above. It did it twice. Okay, I'm seeing something, seeing a little pattern. And then when it does it the third time, you're just like, all right, I think we good. This is the third time and it did. It didn't do it down, it did it up. So if it closes on a 3 minute candle above the uptrend breakout, then you will have your confirmation. But also, we're doing it now for the downtrend because I'm worried about my stop loss getting triggered. So on the 3 minute, we're looking for a downtrend breakout. It needs to close. And what I'm saying here is consider closing all long positions before negative stop loss. So before, let's put, how do you spell? No, 1G. No, 2Gs. That looks better here. So when this alert triggers, or if it triggers, I don't want it to trigger, but if this thing closes below this, this is going to pop up and it's going to say, consider closing all your long positions before triggering your negative stop loss. So there's a negative stop loss where you lose money, and then there's a positive one where you can make some money if it hits it. You just get out of the trade before it hits where you got in. So we're going to say this is for the negative one. I'm going to set that. Now you can see my alert is set on this candle. And so now I get to have my stop loss far away, and it won't do no crazy bull crap like this, wick down, stop me out, take my money, and then go up in the direction I want it to go anyway without me, and I ain't making no money. You don't want that. So to prevent this from happening, put your stop loss far away, set you an alert, and let that alert annoy the heck out of you. Make sure you have to send it to your phone, email. You can set whatever settings you want in here. So if you have to leave and go somewhere, make sure you're going to get a text. Make sure you get a notification. Make sure it pops up on your desktop. Get it, get it, get it. That's your money that you've been working for putting in this account. It's your retirement account. Don't play with this. And if it alerts you, get out, just get out. Don't think about it. Just get out. I don't care how much money you're losing, just get out the trade because you can always reanalyze things. You already know it's going long. So just get out, and wherever it goes, when it gives you more proof that it's going long, jump back in. That's all you got to do. All right, so I think this is pretty much it. If you want to look at, we went to the 1 hour, we got that, we nailed it down to this. Stop loss is here at 62.85. Now let's go to 10 minute, see what that says. So the 10 minute is saying that it's possible it's going to come down to maybe this area here. before going long. So you see why I shouldn't have jumped in my market order. Because even when I thought I was smart, it still wasn't going long, even in this little bit of time frame. This is only 12 pips. It still wasn't going long yet. I'm still in drawdown. So because I didn't go lower in the time frame. So I stopped at the 1 hour. So now I'm down to 10 minutes. I can see this is probably the area. Let me verify it with the fib tool. I only want to focus on this and this because that's where my downtrend, uptrend breakout are. And look at my blue line. It's below 25. Remember I told you guys that's what you want to look for. So it looks like it's going to come down here to probably 63.08 before going up. So what I'm going to do is I'm going to lose that little bit of money there. And then I'm going to put an order at, instead of 63.08, I'm going to put it right at 63.09. That's what I'm going to do. Actually, you know what? I'm sorry. If this is 63.08, oh, you know what I can do? Even better. I'll let the indicator tell me. Hold on, y'all. Let's use. You know what? Nah, let's do this. Let me save this first. What time frame do we have? Oh, we didn't find our supply zone. That's what it was. Here it is. All right, you guys see how the indicator popped up that supply area here? It already found it for us. It's already telling us it's going to be the first sell order, not the higher one. So now that we know that information, I'm just going to get rid of the higher one. Or you guys can keep it there in case it might wake up there. It can hit this, but it might even go higher. You never know. You guys give me 1 second. Got a phone call coming in. Be right back. Post your questions in the chat group if you have any, and then I'll answer when I get back. Any questions about Kiwi Dog? I'll be right back. All right, you guys, I'm back. All right, so I'm going to go ahead and mark this. This shows me that there's something on the 8th day, so that's pretty important. We're going to mark this as a supply zone right here. Excuse me. Sorry again, guys. My allergies are kicking up today. All right, so we got that on the 1 day. Let me get rid of that line. All right. And it's up to you guys if you want to keep this up here, but it looks like it's going to be the 8th day. Got my stop loss here. And where do we say we're going to put our entry? 63. .63. Let's do 20. Let's get above it. All right. And then let me hide these real quick for the moment. What was that for? Oh, I remember now. So that's a stop loss, and then we need to get in at 63.20. Why is it not on there? Oh, here it is. There we go. All right, so we're working with this area that I'm shading in right now. So this highlighted area, that's what price action is working with. It's on its way up. We have a buy stop order at 63.20. We have our stop loss at 62.85. And then I'm going to put another buy position in here, but I need to see it on that back on that 10-minute chart. All right. And where was it? There is one. There's the other. Okay. And then I needed this one. Or was it this one? It was that one. All right. So I'm expecting it to possibly pull back here and then go up. So I have a buy stop order here. So if we get confirmation that it breaks out, you'll get an alert, or I'll get an alert, I should say. Let me go ahead and create one for that as well. So it's going to be notification, bug the heck out of me. Go back to, under notifications too, it right here, you can notify on your app. If you download the TradingView app on your phone, it'll notify you on your app. It'll also show a pop-up. I don't do this because I don't check my email a lot, but if you guys are big email people, maybe you're at work while you're trading, have it go to your work email or something, or your home email, whatever. If email works for you, you can use that. If you have a website, you want a webhook URL. If you know what this is, then here's the option. There's no point in me explaining it. You can also send an email to your phone. So it'll email you, but it'll send it to your phone as SMS. So if you have email here, and then you also press this. So if you do this and this, it'll send you an email, but then it'll also send that same email to your phone. Or you can just get the pop-up and the notification app on your phone. So you don't need this SMS. It just gives you the wording that I typed in there, so you can see all of that in the text message. So Kiwi Dollar, we want this one to alert us if it crosses, I believe this was the up one, once per bar close. And now you have we're going to wait for the 3-minute uptrend breakout. And actually, I'm just going to steal that information so I don't have to retype. Copy. And paste. So consider closing all short positions for triggering, negative stop loss. So there we go. So now that I know it's going to break out past here, if it, actually closes above this, then it's going to probably most likely going to keep going. So then your buy stop order will work. But if it closes below this, which I don't think it will, I think it's going to come down here to make people think it's shorting when it's not, and then they're going to keep going long. But if you want to get in this trade, you got to get in it now because spread is about to change in about an hour. So you got to make a decision. So here's a safe one, buy stop order, and here's a more aggressive one here at 63. We'll get it at the top of this candle here, like that. Let's say 63.10. Or instead of 63.10, 63.08. Yeah, 63.10. So if the bottom right here is 63.08 and you got to pay for spread, they're going to add spread to your entry and put you at 63.10. I think it is. Or if you want 63.10, they're going to, if you want 63.10, they're going to push you back to 63.08. That's what it is. That's what I was trying to remember. So yeah, you want 63.10 to be your entry. So let's go ahead and do that. So our buy limit order is going to be 0.6310, and our buy stop order is going to be 63.20. Let's see it pop up. While it's doing that, I'm going to put on here 10-minute chart. Oh, I got a template for this, I think. Oh, here it is. Buy limit order. That's what I was looking for. All right, so for our buy limit order add-on, I'm going to get it at the top of this thing. And this is at 0.6310. Right now, this thing is pending. Why is it not popping up again? Let's see. Buy limit order. All right, there we go. 6310. Let me turn this off. All right, so we're just waiting to get to 6310 or 6320. Not sure if you're still on here, but is A with all the numbers still on here? A92? Are you still logged in with us? Any questions from anybody? That's my analysis for Kiwi dollar. Get in at 63.10 or 63.20. And take it all the way to all the rest of those TPs that we picked up. That's it. Okay, man. All right. Well, we've been on here for 2 hours already. I'm going to go ahead and call it. I'll be back